Hey guys, time to check in and let you know my current thoughts on the market. And really not a lot has changed for me. If we take a look at the SPY here, we are right in the middle of this lighter grade zone, which is the no trade or the do less zone, whatever you want to call it. But we're still right in the middle of this range where I just don't feel that I have directional clarity, therefore arguably an edge. So I'm in this like mental juggle of wanting to show up here on YouTube and provide value, but also I have to be true to the trader that I am, that I've become, and recognize that I just don't feel comfortable adding a bunch of risks right now. So I have to weigh my desire of wanting to grow this YouTube, to grow the community, without creating content for content's sake or making noise, okay? I'm not adding a ton of risk. I'm not doing a lot. So for me to come on here every day and give you a list of names when genuinely I'm not even considering taking much additional risk right now at all, something's got to really jump off the screen for me to force something inside of this range, and I'm just not seeing it. There's some names I'll review here today that look a little bit better, and I'll give you a reason why I might initiate something if I see what I'm looking for here today. But I just want to say that, look, I'm not going to be that channel. I'm not going to be that guy that is going to come here and just tell you to press buttons, okay? Just because I want to, as I said, grow the channel or grow the community. I'm around, I'm in chat and giving my thoughts. A lot of you guys are self-managing at this point, using the models. And, I want to say congratulations to a few of you are trading right now. And what I'm liking is that you're controlling the size because you agree with me that we just don't have directional clarity right now, but you're taking triggers. For example, just the latest one, I saw that you took this triple R on Apple here on Monday, and then you sold it yesterday over 140%, less than 24 hours. Fantastic trade, clean trigger, right? I think Apple is one of those ones where there's a lot of momentum. The whole agent, Claude bot, all that stuff right now is getting a lot of tractions. Apparently, the Mac Minis and the Mac Studios are sold out everywhere is what I'm seeing, right? So I think that that's got some underlying momentum for the name. But at the end of the day, it's just a clean triple R trigger on a leader in a trend backed by growing fundamentals. So fantastic trade there. The other one that I want to review is this GE trade that another one of you guys took here. This one's really, really clean to me. You got him back here on the remount of the 50 and sold. I think he sold late last week. I believe I sold 343% on those contracts. Fire trade, my man. But look, this is a great example that, maybe I'm not looking for a ton of trades right now, or not looking isn't the right word or way to phrase it. I'm not doing a lot right now, okay, until I feel that my edge, the momentum of the market has cleaned up or shown itself, right? We're up and down, up and down, up and down, midpoint of the no trade zone. But I think there's still, it's why I wanted to jump on and do a video today. It's this trade, maybe specifically, it's another reiteration of what the triple R is and why macro events, news events, earnings can give us opportunities to solidify the thesis of what the triple R is. So I thought I would pull this example and show you guys. So as you know, triple R is a leader in a trend backed by growing fundamentals. We want to be trading the names that are clearly being accumulated. They are in solidified structure holding trends, higher highs, higher lows, higher highs, higher lows, right? They're not shaking all over the place. They're holding structure and they're following through. Well, when you're talking about a name, something like GE, when it's in a hot sector, aerospace, it's a hell of a company, right? It can be a little bit hard to get into these things sometimes. And we were up at around all-time highs with an earnings release coming, and it gapped down on earnings. A lot of people will think the trade's done, it's topped, it gapped down on earnings, this is, going to be a turd for a while. Well, the triple R by definition tells you to wait for these sort of things, and it's the foundation of what the triple R is. You wait for a retracement, reaction at or around our level, and a remount of the moving averages as our trigger. But in this case for GE, it was a poor initial reaction to the earnings report, right? We gapped down on earnings, sold off a little bit, but look at the price action here. We sold off on earnings, but we held structure, meaning this recent swing low, and on volume. as well. So what does that do? Like, obviously I explained this way deeper in Bootcamp, but just to nutshell it for you right here, this is what you want to look for, guys. This is a beast of a company that gapped down on earnings, but they stepped in and held that structure on volume, pushed it back up over our moving averages. That's a trigger. Retracement, reaction, remount. And the thesis, the idea behind that is it was looked at, it was viewed as an opportunity, as a discount, right? So that idea gets confirmed when it holds structure and when it remounts the averages. That is a suggestion that this is going to reinitiate trend, okay? So it keeps us from predicting earnings. It keeps us from overreacting to earnings. At the end of the day, it allows us to look for the positioning opportunity. Do they step in? Keep it from breaking structure, right? Don't allow that new low to be made and reinitiate trend. That's exactly what happened here, and this was a hell of a trade and trigger. I didn't take it, as again, I'm doing very little right now. But to see you guys recognizing and using the model for the entry on the leaders, like I can't say enough. Fantastic trade, absolutely fantastic. And I just wanted to touch a little bit briefly there on the thesis behind that. It's what we look for, okay? I could think immediately of another recent example of this. This wasn't on earnings, but it was a macro event. This was JCI, something up here at all-time highs. It gaps down on it was Jensen was at CES out in Las Vegas and said something about how they don't need cooling for the next gen chips. Okay, so a company that provides cooling solutions to AI data centers gaps down on this. But what did they do? They bought the MFR up, okay? It was viewed as an opportunity to position at a discount. It gapped down, it went on discount. This sort of volume on a nearly $100 billion stock, company. This isn't retail, right? They stepped in on the opportunity, curled it back up, re-triggered over our moving averages, also a gap down reversal trigger as well. And just off to the races from there. So these are the kind of things that my systems, my models look for. I look for these things to go on discount, whether that just be a trend, right? That trends pull back. Okay. We want things making higher highs and then a higher low, the trends pull back and set up the next opportunity. Let's think here. Even here on SanDisk, right? This thing is ripping and running away and we want to get into this thing. Well, look, it finally did pull back and then it re-triggered. Boom, you already got your 2-to-1 on this. No, I didn't take it. I'm being maybe overly cautious right now, but I'm okay with it. I'm okay with waiting for the momentum of the market to be clear again, all right? I'm going to wait for that. Now, it doesn't mean that I'm just full on, I won't take a trade, right? I'm in a VIX trade right now. I've got VIX calls on right now. I'll admit a little anticipatory. It's another reason why I'm trying to stay off the screens a little bit because, I'm anticipating a breakdown of this range and it hasn't happened yet, right? Why are you doing that? That's not typically the way that I like to act. It's not being robotic or mechanical. It's outside of my 6 models. And, I know from past versions of myself that the more I deviate, the more trouble I find. I'm not saying that the trade's broken or that I'm not so hopeful that it works out. It's tiny size. That's another thing. When I'm taking tiny size positions, it's just another indicator for me to realize you're being overly cautious for a reason. Sorry guys, I got a maid and a nanny are here right now, so there's some noise happening. But like I said, it's just sort of an indicator that subconsciously to just pump the brakes, okay? So that's a bit of a signal for me that I'm in a VIX call without a confirmation or a breakdown of anything, right? We're just ranging. We're up, we're down, we're up, we're down, we're up, we're down. We're right in the middle. Let's see what happens today. So a little bit of market breadth here, and then I'm going to jump in. I've got 8 or 9 ideas, 8 or 9 things that look good to me. So if we are to get some good momentum and clear this range, which would be back over prior all-time highs today, so clear this 1, 2, 3, 4, 5-ish day range that we've been in, literally going nowhere for week and a half in the SPY. But if we can clear it today on some momentum, jumping over and looking at like maybe internals and seeing if we're really firing off, getting some extreme readings on tick, pretty aggressive advancement in the AD, stocks making highs versus lows, and the inflow, the VOLD. If things look really good on internals and we're clearing this range, then I could consider one of these 8 or 9 names that I've got for us to look at here today. But looking at tech, like, guys, it doesn't look great, okay? We are in a downtrend until proven otherwise, okay? If this makes a lower high below right there and rolls back down, it's a continuation of a downtrend, okay? So like this is tech. This is tech. And then look at XLF. Like, we just lost XLF and it's popping back up to retest the area. If it rolls again, that's a confirmation. So like, who am I to go? Where tech looks a little nasty, financials looks very nasty. You got something like ARC, so like speculative is how I always view this. Like, come on, guys, this is a bear flag and a half right here, right? So like under the 200, if this rolls, I'm looking at this for a short. I'm seeing caution signals. I am, paired with the fact that we're just not going anywhere. Like, so that's my entire point, is that I miss doing this every day. I'm not going anywhere. I don't want to force it, and I don't want to come in here tell you guys, here's all the buttons I'm looking to press, when it's simply not the case, okay? I am being cautious, and I'm waiting for my edge. My edge requires a solidified follow-through trend, which we're not in, okay? So with all that said, a few names that I am liking right now, okay? This is SN. I love the triple R. I'm really liking Shake and Goes right now as well, okay? So look, we've got a box breakout and SN. This is like the Shark Ninja, they make like consumer electronics, like kitchen stuff. I'm sure they've expanded out of that, but it's like the little, like the bullet thing where, it's like the mini blender for the vegetables and stuff, is what comes to mind when I think Shark. But again, I think they're clearly doing more than just that now. But look, they're through earnings. We've got this massive range that it's trying to break out of. Okay, well, earnings report got us up out of it. Market kind of sucks, pulled us back in. So this is a breakout, fake out, shakeout. Triple R trigger back through the range. This is quite attractive. This is stacking 3 models. Okay, quite attractive here. And it's like, I really wish that we had a more momentous market to trade along with that momentum so that I could take things like this, because damn, this looks so good to me. Another thing before I do this last few names is something like Rimex. This is the other reason why, or a quick example of another internal flag saying like, dude, stop. All right, stop pressing buttons, because I tried to take this last week. I don't know, maybe it was, it was on this this down day, right? Because I wanted the triple R, I didn't get it. We had a big flash down, and I bought this down candle as essentially mocking as if I had bought one of these triple R triggers right here. But this is the ETF for rare earths and minerals, resources, all of the stuff. And I mean, this is a textbook price action. We had a breakout that pulled back, retested the area. So retracement, reaction, remount. I wanted in. I didn't take these initial days, so I took an opportunity on a sharp down day to get in. But then a couple days later, I got out at dead even, or maybe this is the one that I lost 4% on. I mean, it's contracts. Like, that's pretty much even on contracts. But call it break even. It's basically what it was. But like, and now here we go, right? Now it's running off. So it's like, I'm being overly cautious because I know subconsciously that I'm not in the type of market that I want to be aggressive. And it's causing me to babysit, right? When this is mechanical, guys, it's why these other ones that y'all are taking are working. It's why the triple R is popping off out there all over the place. Like, here's FCX, right? Another one where like I wanted in on these triple R's, and you could have gotten in on this guy right here. Here's your swing low, and boom, there we go. Like money printing, a 2R model, right? Could have more in it. It's like, for me, I just have to be real and honest. The fact that I'm babysitting. I wouldn't say that I'm being emotional, but I'm being overly cautious. So it's like, why force that, right? Because you're getting into good trades, just to jump right out because you're being overly cautious and you're babysitting when like these things are working. These things are working even in a less than ideal market environment. So, take that as for what it's worth there. Like Triple R, I say all the time, this is a 70% model when you pair it with the leaders, but it goes over 90% with the momentum, with proper timing, with the momentum of the market, being in the right markets, right? The right sectors, the leaders of those sectors, it makes it a 90% model for me. So look, if you want to make trades, Let's do some more ideas. All right, IREN here is kind of attractive. Back through the 50 here today, guys, okay? Pulled back, held structure. Back through the 50, this is quite attractive. We are through earnings. It's holding up, holding structure, not breaking the weekly structure or any of the stuff. It's okay. Weekly trigger, daily trigger, pretty much the same level. This is attractive. I must say. So, I wanted, there's some things out there that I do like, just like that SM position a second ago that I felt, look, I'll jump on and I'll show you guys some things I like. I am open to a possible position today, clearing range. We'll see. Amazon. We've been talking about this, guys. Some of y'all have been mentioning it in chat. This is very, very, very simple. Gap down reversal on one of the best companies in the world, on the planet. Okay? Gap down on earnings. All right? So very similar to the look of what we saw in that JCI. That wasn't on earnings. It was on a press release or an event, we'll call it. But look, guys, this is a gap down on earnings. It's holding up. It's not breaking down, right? Like, of course, you'd wanted to see some of these levels hold. But, at the end of the day, is this being viewed as a dip, as a discount opportunity on one of the best companies in the world? Okay, well, the first layer of that is breaking the gap down range. Okay, so getting up over that, you could initiate a position and then maybe look back over to the weekly for a weekly triple R to maybe add to it. And then maybe at that point, we have momentum in the market. Maybe the market has gotten up through that range and up to all-time highs. I don't know. We will see. We can only take that day by day and accept what the market is giving us. But guys, this is an opportunity here on Amazon. And that reminds me, I've traded Amazon a couple times following gap down reversals off of earnings reports. Here's one right here. Gap down on earnings, ranged out. There's your trigger. Got you into the start of the resumption of the uptrend. That's not the only time it's happened. Let's do another one. Here it is. Yeah, so another one right here. Gap down on earnings, re-trigger through the area, get you back into the move. So look, possibly another opportunity here on a gap down reversal trigger entry for Amazon. CCL, another one. Like, I really, really like this. This is a multi-year COVID breakdown range that is trying to break out. And again, what are we seeing here, guys? We've got a shake and go. Okay, so you get a breakout, fake out, shake out, pulls back into structure, reacting off of our 50, did not break structure, did not breach the recent swing low, coming back up through 9. This is attractive. Okay, this is attractive. So back through the 9 is a shake and go with triple R trigger, aligning with the box breakout. Again, just very similar to SN aligning, stacking, rather, those three models. Google. This is, kind of one of those moments that matter, okay? Back over the 50 on Google is retracement, reaction, remount. Reaction where? Around our level, all right? We've got our major swing low level here. That's probably a weekly swing low. Sure is, okay? We're reacting off of it. Also sort of aligns with the prior breakout level, right? So at or around the level, getting a reaction, getting some buying coming in, stalling out at the 50, up through the 50, guys, this could definitely have some room. And I'm not sure that I would give it all the way to swing low. I would in a cleaner market environment, in a follow-through environment, but we're not in that. So I think a trigger on something like that, this is where you look for things, like I say a lot in Bootcamp, like look for a defense candle. I'm going to call this right here my defense candle. Okay, it got bought up this day on volume. So the trade would be, something like that. I see no need. If they wipe all that work done on that candle, there's just no need to be in it. Okay, it's that simple. So there's your trade there on Google. You are looking just into new all-time highs for that 2R. All right, so there's the Google idea, and then we've got a couple more here. HLT, really, really hot stock, guys. The Marriott, all that stuff, consumer discretionary was quite hot. Let's look at that really quick. What is that, XLY? I've not looked at it. holding structure, a little bit worrisome. You know, we certainly need to react, and we need to get ourselves back over the 50 for this to really be attractive. This is also more the leisure. HLT is the leisure sector within consumer discretionary, which I am seeing a lot of that do quite well. So look, at the end of the day, all this did was pull right back into the prior breakout zone, retracement, reaction. Rebound in the 9 is a continuation trend trigger, triple R trigger, and Hilton. Let's look at Marriott since we're here. Oh, okay. This could be a peg play candidate. Anybody looking for peg plays? Here we go. I'll pull that up and nutshell a peg play for you guys. Oh, there's our deck peg play that we were talking about, guys. Oh man, that's working out. Guys, these models work. These models fucking print, okay? It's just I'm being a little cautious. You know, it is what it is. I'm choosing to be a little bit cautious. But man, these models work. Anyways, let's do Marriott. They work more often than not. That is the mental shift that can change your life. It's period. Become mechanical with them. Try to align them with, you know, proper opportunistic timing in the market, all the stuff that we talk about. But anyways, yeah, this has got a lot of work to do, and I would expect that this point of control comes down. So that's what you get, a gap up on earnings, a peg play, a power earnings gap. I like it to happen on at least 200% or 2x average volume. You know, and then we put in a fixed range volume profile, which is this shaded area that we see, and there's a point of control, which is the black dotted line. That suggests the buyers or sellers are in control. Below, sellers are in control. Above, buyers are in control. And then we do an anchored VWAP from the gap day. Same exact theory there. Above, below, buyers, sellers. So what we want is price above if we want to go long. This also works to the downside. All my stuff does. But if we want to go long, we want price above the dotted line, the point of control, and above an up sloping anchored VWAP, which in this scenario, there's work to be done here. But, you know, it can be on your radar. And if those things begin to happen with a hot market or a market that's cleaning up, then, you know, this is attractive. Alternatively, you could just look at this as a triple R, okay? It gapped up on earnings, sold off a little bit, you know, getting itself back over the 9 is a triple R trigger. ECH, okay, this is a Chilean, I think it is. Yeah, Chile. All right, so this is a Chilean ETF right here, triple R triggering. We're considering on volume, all right? Means you don't have to go in and pick names. This is, you know, Brazil's hot as hell right now, you know, so maybe Chile is kind of the next, like, speculative name. But, I mean, at the end of the day, this thing is just on an absolute tear, and the retracement, the triple R that we said we had to wait for, okay? Retrace back into the 50, reacting off of it, remounting the 9. You know, if you get it inside open, take it through yesterday's high. If you get, you know, momentum out of the gate, then, you know, you've got a clean trade here. You've got a clean trade. We don't need to over-explain it. All right, swing low on this one is your stop, the way I see it, okay? And you're looking for some new highs there. You know, and maybe you get a little bit better of an entry, which could bring that target down just a little bit. You know, and hey, what is that? A 10% move on underlying? Not a bad world to live in, okay? Not a bad world to live in. You'd have to look if, you know, I don't know how liquid these options are going to be, but, you know, if the spread isn't too bad or unattractive, then I don't hate it at all for options. And then last one here, looking at VNET. This is something that somebody on a Saturday session brought to my attention. Guys, we're going back live this Saturday. There's some things I want to talk about. I want to talk about shake and goes a little more closely because I'm seeing a lot of them. Here's one right here. I swear I didn't even mean for that to happen. You know, it's a hot model right now. So I want to talk about it a little more closely. And then, yeah, we're going to do a pretty deep analysis. Guys, I do a live market analysis. I look at all the sectors. I find strength. I find weakness. I build the plan for the week ahead live, and I open up to what has been at least a 1-hour AMA every week thus far. So if you have any questions, if you want to review any tickers, any sectors, anything, I will answer anything. So it's not a pitch. It's not a webinar. Live analysis, AMA, until you guys stop asking questions. So join me, email me WarrenSnax@gmail.com. I will send you the live link. If you've been there before, look for that link coming Thursday, Friday. But if you've not come, join me. It's worth it, okay? And all of that came up because this VNET is something that someone brought to my attention. And one of them, I believe he said that this is a data center play in China. You know, it's got something here, okay? It's definitely got something here, accumulation being the main something that I see, right? Check this out on a weekly chart. Like, this is getting accumulated. I don't love the overall chart structure. I don't love China stocks. I don't love China stocks. too much headline risk for me, but at the end of the day, you're getting a breakout, fake out, shake out, pulls in, does not break structure, re-triggering through the 9. You could look at this through yesterday's high. Not the worst thing I see out there. So guys, I will remain, I don't want to use, I'm going to stick to the program. I'm going to stick to the plan. If the SPY gives me more clarity along, with the RSP and the Qs and all of these things, if things clean up a little bit, maybe if we invalidate the move that's happening in XLF, right? Like we can't lose tech financials. I mean, come on, and have like a follow-through move to the upside that we can trust in the market. And I'm just not ready to start shorting a bunch of shit because we're not there either, okay? Y'all know my scenario to the downside, okay? The way that these things look in topping cycles to roll into whether it be a sharp correction or a bear market. First you lose the daily, okay? Then you confirm, and then you lose the weekly, and then you confirm. Then you lose the monthly, and things get nasty. And we typically test prior cycle highs. So that is still the bearish scenario should it begin to play out is what I'll be looking for. But guys, what do you want me to say? We're right in the middle of the range. We don't have directional edge right now. We don't have momentum. We damn sure don't have follow through. I'm not going to force it, okay? I will continue to wait, and I will apply my edge when I have it, and I will print money. So I encourage you to remain patient, okay? Don't press it. You don't have to force it. The markets will break out of this range, and it will be much easier to trade, whether that be upside or downside. When we get back into a follow-through environment, it's going to be much easier to trade than trying to predict the next move. Just let it happen or let it happen, okay? It will come. It will come. Come Saturday, all right? There will certainly be some value there. But yeah, let's see what we get throughout the rest of the week. I'm, looking for that range to break, or I'm looking for this range to break. And maybe I'll initiate some risk should one of those two things happen. I don't have too many shorts on my radar that I want to talk about here today. ARC, just to give you one to close out, this is on my radar. If the market rolls, right, we've got a head and shoulders here, and it's coming back up and testing the area. Very similar to what I say all the time, like it's breaking out and changing character. Wait for it to confirm, okay? If we were looking at this as upside of price action, we have a range here. It's breaking out. It's trying to change character. Wait for it to confirm after that happens. Well, that's exactly what's happening now. It's pulling back in. Let's see if it confirms and initiates or resumes trend, okay? It's all the same stuff. This is just to the downside. So if the market rolls sharply to the downside, okay, we've already got our first leg, right? The breakdown of the head and shoulders neckline. We've already got the move. We've got our bear flag. We've got all this stuff setting up. We're down below the 200 moving average, right? This looks pretty nasty. So if the market rolls, you can take it somewhere in this range and just set a swing low with a 2R target on it and take that puppy down, okay? A lot of thin structure there that it could easily retrace through, but it needs the momentum of the market. That's why it hasn't happened yet, because the market is going up, down, up, down, up, down, up, down. Stay safe, manage your risks. Let's go make some money. I'll see you soon.